Well, I'm extremely excited. I've been working and working and working so hard to get Brad Ferguson on the show. He is a busy guy. And finally, he found a slot where we could get a bit of his time. Bradford is from rebellionaire.com, and that's where you'll find him if you're interested in learning more. Bradford, so excited to have you on the show.
Yes, and Rebellionaire is a brand of Halter Ferguson Financial. Disclaimer is on our website, hfinancial.com/disclaimer. So I am a financial advisor. This is not financial advice. I'll be sharing a lot of opinion today. Try to get my facts right, but we'll do our best.
Okay, yeah. Well, this show never gives financial advice, even though sometimes some of you think that's what we're doing. But it sounds awfully, sometimes it feels like financial advice. I'm sure everybody gets that that's part of the deal. Well, gosh, if I was giving financial advice last week, I would not have said that Tesla would be up something like 15 or 13, 14, 15, I guess 15% right now over the last 3 days. That's been a wild ride. What do you think's going on that Tesla is even though the market is up, Tesla's whacking it more than it normally does?
Well, I feel like Tesla got punished a little more maybe than it should have after the earnings call, where Elon was talking about interest rates. I think the market is mainly reacting to a softening in inflation and a softening in tone from the Fed. I think the market didn't take the Fed seriously enough for a very long time. But then in October last month, it was taking the Fed way too seriously and got overly fearful about interest rates and inflation and the Fed. So I'm not surprised to see a snapback type rally like this that we're seeing this week. And we're seeing a lot of the names we own. We own some other growth names like Lemonade and other things like that. So we're seeing significant outperformance from growth names in general. Seeing a little bit of underperformance from value names, like we own Lilly stock. We own Lilly because of their Mounjaro drug. I've lost 100 pounds on both Wegovy and Mounjaro.
Wow.
Yeah. So shortly after I started on the drug, we bought that. But Lilly's more of a value stock, even though it's got this big growth component to it with the Mounjaro drug. And we saw that Lilly underperformed, I think it's yesterday or the day before.
Well, so if we have a situation right now, we have a situation where the bond market had gone really strong for several days as well. And then all of a sudden today, with really good news from the PPI, which I reported on earlier this morning in detail. So you get this good news from the PPI, but all of a sudden there's a big sell-off in the 10-year today. Profit taking or what?
What kind of sell-off are we seeing?
We're looking at up 10 basis points on the yield on the 10-year.
Oh, okay. Well, it shot all the way up to above 5, right? And got all the way down below 4.5%.
Right.
So I'm not surprised that it's a little volatile. You have different treasury auctions that happen too that can affect the 10-year. The bond market is the biggest market in the world. It's actually bigger than the stock market.
I didn't know that.
So that people say that the bond market tends to get it right or whatever.
I see.
But I think people got got a little carried away with their fear. People are also concerned about geopolitics and potential for war, if Iran got into it with the US, that could cause oil price spike and
and something more. So there'd be way more than just the oil price strike involved.
Yeah,
Spike involved in
like
that.
I don't see it as a real risk. I don't see anyone coming to Iran's defense. I don't think China or Russia would defend Iran. So I don't think Iran would overtly get into it with the US. So I think like fears about World War III are overblown. I feel we also kind of tricked ourselves into thinking that the Middle East was stable. Because there was a period of seemingly relative peace, and I think it's always been unstable.
Sure.
And so I think it's these emotions that are kind of like tugging at the market back and forth, and it's not just with the stock market, it's with the bond market.
So I'm going to bounce back. A minute ago, you said you were in some other growth names. Do you invest in the Cathie Wood ETFs themselves? Do you invest in some of the growth names that she looks at?
We have a quality screen, so most of the names that we invest in are profitable. So
I see.
Lemonade is an exception, but we believe Lemonade is going to become profitable in about 2 years.
Okay.
And we have a high degree in confidence of that. Other growth names we own today are already profitable and are rapidly growing their profits. NVIDIA is an example.
That's right.
We own a stock we'll talk about soon called Array Technologies. They make solar trackers. So the solar trackers, instead of being on a fixed tilt where it faces south, these commercial solar installations, they are on a tilt where a motor, which creates maintenance and point of failure. So there's a downside to it, but basically it points east in the morning, and then it follows the sun during the day, and because of costs coming down and all that, it's a no-brainer now.
Wow, I see. Wow.
We think Wall Street is not ready for the shift that's going to happen in the next 2 or 3 years.
So the growth stocks, I call the Cathie Wood stocks a group. I call them, I refer to them as the risky growth stocks. So a specific name, risky growth stocks, and I chart them as a group. Not only her ETFs themselves, but also a number of her names. And usually when the bonds are going higher, hers are going lower, and when the bonds are going lower, hers are going higher. But today, Tesla and the Cathie Woods are doing the opposite of normal. The bonds, the yields are going up, and the Cathie Wood stocks are going up too, like crazy. And so is Tesla. So it's a very, very weird day today.
Yeah. A lot of the companies they own, in our opinion, are they have no or very little hope of profits
ever.
And that's why they not only did they get punished when rates went up, because if they ever do hit profits, like their profits are way out here in the future, and that's what gets hurt when rates goes higher. But I like you look at Roku, you look at DraftKings. Like, why is DraftKings not a profitable stock today? Like, they make so much money off of their off of the pools they run. They only pay out like 55 cents on the dollar or something like that. But they're losing money. You would think in the heyday of sports betting, online sports betting, they'd be profitable. Or Roku, you have all this stay at home, a focus on entertainment, and Roku's not profitable. It's like, if you have all this stuff that's going in your favor, trends going in your favor, and you're not profitable now, when? When's it going to happen?
When is it really going to happen?
Yeah.
So we could imagine that some of Tesla's overperformance right now might be related to FOMO heading into the Cybertruck event. And since there's so much energy around the event this week with people getting their golden tickets, what do you think? Do you think we're already seeing FOMO, or do you think it's too soon for FOMO?
I don't think the event itself is going to be a big driver. Why is it waiting until now? This why wasn't there a response when the event got announced, that sort of thing, or all the Cybertruck videos we see on Twitter and YouTube and TikTok and Facebook, that hasn't been a spark till recently. There's been some other positive news with Tesla. They've been able to raise some prices incrementally here and there,
right?
So showing a stabilization in their margins and possibly a pickup in their profits. I think that's a helpful. What you could see that's kind of can be strange is we have a Starship launch on Friday.
Hopefully,
it's looking likely, and it's possible it could be Saturday or Sunday, but it looks like the FAA wants to grant the go ahead and make that happen. What can happen with some of these really big launches is people will associate it with Tesla, even though SpaceX is not a part of Tesla, and so they'll put money in Tesla because they're excited about SpaceX.
Right. So if we don't have, so speaking of their numbers being stronger, do you have have you made a prediction, a public prediction, maybe or not? Are you ready to make a prediction about the quantity and the margin for the fourth quarter?
That would be something that Matt does.
So, that's Matt's department. Okay.
Yeah, Matt is our he puts together our projections and financial modeling. We don't have anything for the fourth quarter. I am encouraged in general with how China appears to have quickly been able to ramp the new Model 3 trim. I was concerned that there would be a slower ramp from that, and we're seeing a really good volume and exports to Europe of that, and I'm guessing we're going to see substantial local sales toward the end of the quarter with the Chinese-made Highland, and I'd say that's looking forward to next year. Highland is encouraging. I'm guessing eventually they're going to start doing it at Fremont. And then they'll probably introduce similar changes to the Model Y, which may be codenamed Juniper. We don't know.
Right.
And the benefit to all this is you switch over all the seat making to very similar seats. It's a high quality seat. People who are not Tesla fans like we are, or Tesla owners of the car, they'll sit into a new Model Y Highland in Europe, and they see the quality of the seats, and they see the video screen on a console, and they're pretty blown away by the quality. So I think these changes that they're implementing in the 3 and the Y will increase demand for Tesla, everything else being the same, and it does help Tesla reduce costs because they're using these seats in the S and X right now. So if you can make a similar seat in the 3 and Y, then you're just growing your scale and putting all your scale on one process. Same thing with the consoles. If you can make all the same consoles, or back part of the console, or however it works, and do all of them the same, then them adding that screen really isn't going to cost a whole lot, and it greatly increases increases the perception of value.
So
So
now,
I think that's going to be a nice tailwind next year.
yeah, I agree. So if Matt is doing the analysis of the numbers for Tesla, does he also do the overall economy and the stock market macro analysis, or is that your department?
We look at that, but we don't let macro be a decider. What we tend to do is, and we like even for rebellionaires, we might have some other stocks. So we might trade between the other stocks and Tesla a little bit. And we can talk more about this later. But typically what we do, instead of trying to predict macro, which I think is very difficult, you can't predict geopolitics. I don't think you can predict the economy really. Goldman Sachs and other firms, they have huge teams of people that are analyzing the economy and all these different stocks, and they're not able to predict it either. So I don't.
They should call me. I started 9 months ago saying, no, inflation is over. Interest rates are coming down. The economy is not going to go into recession. I am on record repeating those three things over and over and over again for 9 months. And all these other guys are like, oh, there's going to be a recession of some kind. And but they don't call me. I don't get it.
Yeah. What we want to do instead is to just look for opportunities where if a stock's gotten beaten down too much, we might trim some other names to buy it, or if it shoots way up and we think it's unsustainable, then we'll trim back on that company and then just redeploy it. So as long as we're being disciplined like that, then we're not worried if macro like crushes a stock, because that gives us a buying opportunity, because we've trimmed at various prices too.
Right. Keep a little powder dry for those opportunities, huh?
Yeah.
Now, do you one of the things that I've started to wonder about, and I wonder if this is something you wonder about, is a possible rotation out of the Mag 7 and maybe a little bit out of tech into the broader market. We saw 97% of the S&P yesterday was in the green, which is a pretty wild day. Is this something that interests you? Do you pay attention to the fact that the overall market might be moving into a broader pattern, and again, starting to pay attention to some companies that are doing very well that have lagged because everybody's so concentrated on the Mag 7?
We own some small cap funds for clients who are more diversified, who aren't in the rebellionaire category. The small cap stocks did really well yesterday and been outperforming the start this morning. Small caps, they tend to be a little less financially strong, and more dependent on raising debt from time to time to fund their business and have that security. So when rates go higher, those stocks tend to get punished, and they have outperformed the most out of any category, or underperformed the most out of any category to date. But now with the specter of rates coming down, money is moving over there. What we tend to do with our stock picking is more look at a company, what's called from the bottom up, where we'll see, okay, what how quickly are they growing their earnings? How are they growing in their market? What's happening with cost and competitive position? So that's called bottom up investing.
I mean, it sounds extremely traditional and fundamental. You're looking at their foundational principles and the things that would make them great in any market.
Yeah, that's what we're looking at. I'm what you would call a converted value investor. So I used to
a converted value investor.
I used to only be interested in a company if like their price to earnings is like 15 or lower, or something like that. But what I discovered and realized with Tesla and all that is, like, The growth in earnings is what really matters. Reason why you own any company is for the growth in
Future
earnings.
earnings, yeah, future earnings, yeah, yeah. So what was the big thing that got you to become a Tesla fan? What was the number one or number two or three things that motivated you? And you're like, okay, I have to have a picture of Elon on my wall. I'm so excited about this company.
I would say the big thing that got me to look into Tesla was the first Joe Rogan interview.
Oh, interesting.
And then in the timeline of me watching that, shortly after that was Autonomy Day.
Oh, yeah.
So I saw that interview maybe a week or so before Autonomy Day. I think the interview was much older, but
yeah.
What got me to look deeper was how the media reacted to the interview. Elon smoked pot on the interview, and people were saying, no Fortune 500 CEO should ever smoke pot ever. Even if it's legal in the state you're in. And that got me to question.
Or drink martinis, right?
Yeah. That got me to question the narrative and got me watching Autonomy Day. And then I learned about the scale advantages Tesla has with batteries and the big data advantage they have with autonomy. And they were doing some very interesting things and making their own chips. And, how many car companies do you see making their own chips instead of, buying something off the shelf from NVIDIA or ARM Holdings or Qualcomm or whatever it is. So that's what really hooked me into Tesla. And it was also a time where they had a very poor earnings result. So their first quarter earnings in 2019 was bad because they left 10,000 cars in transit. It was their first quarter shipping cars to Europe, to ship the 3 to Europe, the Model 3. And, management had a pretty easy explanation for that, but Wall Street, they didn't like it. They didn't like Tesla, flipping between profits and not being profitable. And Dan Ives actually called it the worst quarterly report in 20 years from any company that he's ever analyzed. So like Tesla's always been controversial and misunderstood. And I think that's part of what creates the opportunity.
So then you got involved in Tesla as a stockholder yourself. You started recommending it to your clients right away, or you waited a while before you started recommending it to clients, or how did that transition take place?
So I'm a fiduciary, and
Yes.
what that means is I have to put my client's best interest first.
Yes.
So generally, when we buy a stock, we have to buy for clients first, unless we don't think it's appropriate for the portfolio or whatever. Then you can, buy it, something that you aren't thinking that you would buy for clients. So typically, when we buy a stock, we buy for clients first, and we have to buy afterwards.
Got it. So you have to justify it in your mind that it works for your clients. You buy it for the clients, and then later on you can put it in your own portfolio, assuming that you choose to do that as well. Do I understand that correctly?
Right, but it's not like a false justification or anything.
No, I understand. No, I wasn't suggesting. No.
Yeah, I thought when I bought it, I thought Tesla was like a 3 or 4x in a couple of years, and
you were more than
2 or 3 years, and it 4x'd in like 10 months or something crazy. Yeah, it was nutty.
So somewhere along the line, you decided that maybe your company would make kind of some kind of a marketing decision to start specifically targeting Teslaonaires as clients. Folks, the Teslaonaire definition is somebody who has, I guess, become a millionaire as a result, or has $1 million in value in their portfolio in Tesla stock.
Yeah.
And so that apparently has worked well for you, because at least as I followed your career over the last 7 or 8 months, you seem like you're growing, you're adding Matt Smith to the team and doing other things. So it seems like that was a very good business decision. And then, so now you have apparently a bunch of these folks as clients. Is that, am I getting that half right?
Yeah. And I'd say the trigger for that was when I went down to Texas for Cyber Rodeo. And I realized that, like, of the 1,500 or more people that were there for the TeslaCon convention there, most people had like $250,000 or more in Tesla, and they were successful enough that they could travel at the drop of a hat to go to a Tesla nerd event, and they were either business owner or a consultant or just very good at what they do, or retired. And what I heard from them is
theoretically retired anyway.
Yeah, what I heard from them is some of them would try and approach a financial advisor to get financial advice with the rest of their money, and the financial advisor would look at their statements and laugh at them, because they see all this Tesla and they're just not used to seeing that. Like, it's just a reflexive laugh.
Right.
And then the next thing that would come out of their mouths is they'd be like, well, if we're going to work with you, you have to sell at least half your Tesla, if not like 90% of it. And I just don't think that's right. Of course it is risky to be all in on a stock or have a very high percentage in a stock, but like, that's your decision. And I think people in that situation need financial advice, beyond that.
And sure, that has been, I've been, playing the stock market since I was, I guess, playing it actively since I was 19 or 20. The cry has always been diversify, diversify, diversify. But, this might be a once in a millennium stock. I mean, I followed Apple like I follow Tesla. I followed Fairchild Camera and Instrument, which, back in the 60s when they were the Tesla of the day, putting amazing cameras on the first satellites. I followed the General Electrics, etc. This company and this leader is on a different page. This is a historical time, and historical situations call for a different strategy, I think.
Yeah. And we do 3 things on the investment side for Rebellionaires. We sell covered calls to generate income on a stock that doesn't pay a dividend. We use a margin of safety for that. We also do trimming and adding. So a lot of people just hodl their shares, but they're not taking advantage of the emotional highs and lows that we were talking about earlier.
Yeah.
And the last piece is we add in some small slivers, maybe like a couple % here and there on the names we have the most conviction in. And then the last piece we do is on the financial planning side, as we put together a financial plan to look at tax impact of things and how all the finances work together. And, as far as like, okay, how much can I be spending and not, end up costing myself too many shares of Tesla. And basically the goal
At some point,
is,
you got to enjoy it,
Yeah.
You can't just keep on accumulating.
Yeah. The goal in general is to maximize Tesla shares for a lot of these folks. And that's one thing that covered calls can help do, is like, if you're in a wind down, like you want to spend a little money here and there, some income or some opportunistic trimming can help with that. Nothing's free or easy of what we do. But we think this is a crucial service, and I think we're unique in the US and providing this breadth of services.
I really suspect you're right on that one. I think you're probably unique. So there's a bunch of folks out there, as you said, you mentioned $250,000 worth of stock. You know, a lot of folks might be looking at your company and saying, boy, you know, I might like to have an advisor like that understands me, that gets me, that isn't going to be trying to talk me into doing something that's counter to my inclination right now.
Right.
But do they have to have $1 million worth of Tesla stock, or do you have any kind of a qualification, kind of a threshold?
Yeah, there can be exceptions made if people are adding to their accounts, some things like that. I'm happy to talk with people, but it's a done for you service. And we manage all of it. So we don't just manage a sliver over here. I want to have the responsibility. I think I agree with you, like this is a critical time as an investment and in the investing world, just with technology stocks too. And I want to help people, you know, try and maximize that. I think there's going to be a tremendous amount of wealth that's created by Tesla and other like other AI and tech companies, and that the impact of this wealth is going to be felt for generations to come. Like all these Teslaonaires are going to have the opportunity to impact their communities and their families, you know, in a major way.
Oh, already happening. So
yeah,
one last thing. What would you say are the 3 top things about Tesla in terms of, I hate to use the word catalyst, but market movers are just company mover. What are the top 3 things that you're excited about between now and the end of the decade? What are the, you know, I know for me, there's at least, I could probably name off 20 things that I'm excited about. Which are the 3 that most intrigue you?
So the biggest one would be Tesla Bot. I think Elon's very excited about Tesla Bot. If I'm reading the tea leaves, at the annual shareholders meeting, he wore the Tesla Bot shirt, you know.
Yes.
So I think he knows, you know, something we don't.
Okay, I got to stop you. So are we going to see sales or rentals or leases to third-party owners in 2024 of bots?
No,
Come on.
Tesla's gonna have plenty of use internally for Tesla Bot. Tesla Bot solves a major problem. There's a lot of jobs in the world that people do not want to work, that are boring, repetitive, and stressful on the body or dangerous. And Gigafactory Nevada is a big example of that. Yeah, I hear that there are new employee trainings that happen. They happen either on a weekly or every other week basis. There's 100 people in those trainings.
Wow.
So 100 new employees.
Wow.
But the number of employees today is roughly 3,500. And in January, it was 3,500.
Huh. Interesting.
The turnover is tremendous.
Because nobody wants to work in Sparks.
It's not a job people want. People are already there in Reno.
Yeah.
So, you know, they are in Reno, but they don't want that type of job. I don't know if it's as bad as like a Amazon warehouse or whatever, or the FedEx jobs, but it's a brutal job, and it's like the perfect job for Tesla bots. And
okay.
I think Tesla is going to be able to do at least 50,000 Tesla bots internally.
Okay.
Before they need to sell it to other manufacturers or to lease it to other manufacturers.
So what would be the limiting factor in your mind? I have to, so I took this tangent because I have to, because I love the category so much. So what would be the limiting factor that you don't think they'll make more than 50,000 bots in 2024?
No, I'm just thinking about you asked about when does Tesla sell to a third party.
Well,
So
and you said
I
they
think
need 50,000 internally. So
I
how
think
many?
I think they would do internal first.
Yeah.
I don't know what the decision will be. They will need to ramp the process, and these are small motors.
Yeah.
I don't know if that makes it harder. It's small motors and actuators. So they have to figure out how to make those. They need the chips. So there could become a point where, I think Tesla can like 10x their manufacturing of the bot in the early years, but there's going to become a point where there may be some supply chain issues with maybe the brains that go into it, or maybe there's some other parts that we're not thinking about. But I think there could be some supply chain things that slow it down in the mid years. But our valuation of Tesla Bot, we did a video on this on Rebellionaire YouTube channel, is that the value of Tesla Bot today is $3,400 a share.
Okay, 3,400 right now.
Yeah,
and
we don't expect people to agree with us, but it's based off of how many bots we think Tesla can use internally and the value of the bot to whoever uses it. And you think about that new employee training, and that's happening in many companies across the US and across the developed world, but also in China, elsewhere. Hiring new employees, doing new employee training, having inefficient employees, having employees that get bored or stressed or whatever. Tesla Bot or humanoid robot in factory is a big game changer for them and has a tremendous amount of economic value.
Huge. Okay, really quickly, number 2 and number 3 that you're excited about.
I would say I'm excited about Tesla Energy. And we can get into that in a little bit.
We're going to have a separate show on that. We're going to have a separate show. Good. Yeah.
So that's Tesla making the giant batteries for Megapack, but also the new Powerwall that has the inverter inside. With the inverter inside, they're taking more market share from some of the residential solar players. And so that's a big one. I am excited for V12, but I would say just the auto business, I think it should firm up. Tesla's doing some advertising now and beginning to correct the record. So yeah, I'm optimistic that this swoon and profits will soon end, and they'll start to increase their margins again. So I'm excited about that as a catalyst too.
All right. Well, Bradford Ferguson, on your second visit to the channel, very, very good news. This is the good news channel, and so I'm always happy to have people that bring on the good news. And for those of you who might be interested in getting involved with Bradford, he's not paying me to say this. I've become very, very impressed with their organization. and I'm also not currently a client. In fact, I'm not a Teslaner. For those of you out there that are confused about this, I have still got a lot of my money in property, and at my age, that's probably where it should stay. But anyway, excited to have you on, Brad, and we will have you back either Thursday or Saturday. Haven't decided when to run the show, but to talk specifically about Tesla Energy, one of my favorite topics. And again, thank you for being on board.
Awesome. Looking forward to it. Thank you, Randy.
And to all of you out there, it's been great talking to you.